You're right, the market's in a little bit of a holding pattern. Last few days down, today flat. I think the end of the month is more important when it comes to the Fed, right? Let's get the meeting in. Everybody's waiting to see if they make the move. That's been kind of priced in. Is it priced in? Is not priced in after Friday. So for us, when we take a look at weeks like this, where these movements are really muted, it tells us that the market is expecting higher moves going forward. So we actually interpret that lower volatility as, hey, the market's not fearful, right? We typically see volatility spike when there's a lot of fear in the market. And when you see a VIX under 16, kind of a green light.
Now, what about earnings season? Because, FactSet calling for 2.5% decline in earnings in the second quarter. Does it feel like people are skittish ahead of that? I suppose this week's action would suggest not, but certainly those events are coming over the next month.
Yeah, sure, right. We're about to start earnings season. We get into the meat of it, right, when we have the Fed meeting. So I think that week might have a little volatility, but in all honesty, the last quarter, the analysts didn't really get it right? And so I think they're being a little more conservative this time around. I'll give you an example. Yesterday, we had the downgrade of Apple, right? But if you look out a year on the Apple options, the odds are that it's going higher from here, right? Where the probabilities are 5% higher, 5% lower, it's all to the upside. And so the options market is certainly positioning for more move north.
And just when you look at the options market, let's go back in time 6 weeks, right? We had a pretty rough May, but the market got that back pretty quickly in June. Just from a positioning standpoint, does it seem like the market's gotten itself crossed up a couple times this year? I mean, the rally we saw at the beginning of January certainly had to do with the Fed pivot, but it was kind of fast and furious all of a sudden. The move we saw in January, kind of off the bottom there, was pretty quick. Does it feel like investors have found themselves wanting to find a way to get bearish and then just getting caught out?
From our perspective, the position where we are today, we're I think less than 1% off the all-time high on the S&P, right?
Yeah.
I mean, basically we're there. But what many folks don't realize is that we are within 3% of an all-time high frequently, like 36% of the time, we're within 3% of an all-time high. So this is not a rare situation. I actually think the market is poised. You got to go higher. You've got lower rates, which where else are you going to go at this point, right? High yield is showing not a lot of cracks, but it's topped out as well. And so for us, when we put ourselves looking at where to position investors with low volatility, it's very affordable to hedge. So have the upside exposure, have the growth as part of your portfolio, but limit your downside. And with options being so cheap, it's really affordable to do right now. So, we're not timing the market. We like to manage our hedges instead. Be invested, but limit the loss.
That's the stocks go up thesis.
There you go. They usually do.
I like
average
that.
day, it's up about 2 basis points.
36% of
36% of the time, we're within 3% of an all-time high.
There you go.
Nice little nugget.
Now you know.
Don't forget.
I
Don't lose that piece of paper.
I wrote it down.